Asian stocks declined after exports from Japan fall the most since the aftermath of last year's earthquake. Caterpillar will be one of the big earnings reports watched this morning as investors look for clues about the health of the global economy. I'm Lindsey Bell, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Lindsey Bell with TheStreet, and together we bring you the Morning Call Express. On Friday, we saw a major pullback in the indices. In fact, the S&P 500 gave back most of its gains from earlier in the week. Now, this morning, we're going into the market, and the futures have a little bit of a positive tone. So how do you set up trades going into this?
I think some traders are going to try and sell this up open. The question is, how quickly can it be faded? Maybe do we bounce around for a day or two? But after Friday's potency to the downside, I think a lot of people are taking a defensive tone. And if you recall, late last week on Thursday, we started to really see some of the damage in stocks start adding up. You saw reports and pretty much horrendous treatment of a stock like IBM that broke its 100 and 200 day. You saw selling in Apple pretty much every single day. Intel, semiconductors on the lows, technology, no real bounce. So traders were kind of scratching their head. Why is the S&P holding up? Why aren't the indices following suit? And then finally, on Friday, you had that big down day.
So what levels do we watch going into this week?
Well, if you didn't lighten up on Thursday when Google was halted and you didn't lighten up with all the other action, you had the line in the sand that we talked about. We said if the market was going to have any commitment, it should hold 1445 on the S&P. If you look at the chart of the SPX, you will see here is this upper channel right here. That's where we were holding, where there was a chance that we could break above this resistance. But you know what? Pow! Friday, we sliced through this middle end of the range, showing us that we can go right back to the bottom. So now, if we stay below 1440, 1445 in the next few sessions, I do think there's a high probability that we take out this important support, this 1422 to 1427. Then the next real level here comes in, right around 1396, 1397. And then who knows, maybe we even see a move down to go between the two moving averages right here around 1380. So at this point, I think you need to be very defensive. And if you were jumping out of your skin on Friday, perhaps put a hedge on into this, the green in the futures this morning.
Well, tech has been weak for some time, giving us some clues. If you take a look at the cues, we got two big down days on Thursday and Friday. Friday was down 2.5%. Of course, Google weighing in there, IBM as well. What levels do you watch here? Is there more weakness, or can we be contained here?
Well, traders say, they don't like when tech leads us lower, that healthier markets, tech leads us higher. So this was good. Having, not saying good that it was weak, but good that at least it gave you clues not to be, too heavily invested or too much risk on. And if you look at the chart of the cues, we pointed this out and off the charts. Look at this head and shoulders pattern. Here's your left shoulder, the head, the right shoulder. Look what happened here. This is when we broke the support. And remember, we broke the 50-day moving average much earlier than every other index here in the cues. So that gave you some signs. And then it came lower, came back, retested the broken support, which turns into resistance. And then look at this, pow. So at this particular point, here's your new point of reference. You have 65.60. The measured move of this actual pattern has been met, but now we just have to see if a more negative macro pattern gets put in place. So then, all of a sudden you have the 200 days. So for right now, if you were short, I would think covering into Friday's close made sense. And now let's see again, does it try and retest this area to get rejected? So at this point, technology still looks like it could be in trouble.
It'll be interesting to watch Apple. They report earnings on Thursday, and I know that expectations have come down there, but what type of move are you watching here? Are you trading it before going into earnings?
I trade it every single day, and there have been times to play it for a bounce, but the bigger money's been made on the short side. So the question is, will it be down enough going into Thursday's report? So if you look at the chart of Apple, ever since it broke the 21-day moving average right here, it turned into a trade. And then you had a few trades, along the way, bouncing, at the 50-day the first time, bouncing at the 100-day. But then every time it's saw the same moving average, it sliced it. And look what happened here on Friday. Pow, sliced it, closing the dead lows. At this point, it's up like $3 to $4. Let's see if it tries to bounce and gets rejected around 620, 622-ish, or maybe a little bit higher. But if this moving average rejects it early on, who knows? Maybe we see a move down to the 200-day coming into earnings. And I think then I think a lot of traders would probably take some kind of call spread or in the money option play, considering the size of the move from 700 down to 580. The risk reward probably be better to start leaning long again.
Yeah, no, those will be ones definitely to watch. We're going to get into all this, though, and more in the long-form version, so be sure to tune in for that.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.